Hey everyone, Sai with Elite here. So we had a crazy sell-off in the market past couple weeks. So I'm going to look at the key support levels, key resistance levels, break it down step by step, so we can look to see where to buy, where to sell, take profits, etc. And also a couple key things to look out for the remaining 3-4 months we have left in 2024. So when we take a look at this, we can see in the highlighted section right here, this is a short term, which means that it's in the past 2 to 3 months, because we want to see the highs, the lows, the trend, and see what's going on. So we see that the highs were at the 565 region. So let's just call it the 560s to be simple. And we see the lowest for now is the 510s, 510 at the support. So our support and resistance are going to be 510 support, which is a low region, or high, which is a ceiling, is going to be the 560, 565, that 560 region. So let's jump back into the chart. We can see that that is a 50 to 55 point move. So that means that we've already seen about a 10% correction in the stock market. And based on this, we want to look at the Fibonacci. And this script is available free in the chat room. Every time the Fibonacci gets to the 23.6, that's a short-term correction. It's a very healthy correction. But once we start going below it to the 38.2 and the 50 region, that means we're very oversold all the way down to 23.6, which is at that 530 region. I'm keeping the numbers simple so it's easy to understand. And then the 38.2 is at the 505. Let's just call it 500 to keep it simple. So it never hit that 505 or the 500. So it bounced back before that. That means that it was just some sector that was selling off in the market, and that was the tech sector. So when we see Nvidia and all these Apple and Tesla, all these big stocks that sold off, that's what brought the market down. So that's really important because we want to look at the sector, whether it's banks, like back in 2008, it was banks. During 9/11, we had the airlines, and during COVID, we had a whole big sell-off in everything in general. And right now we're seeing the big tech sell-off because we had a huge run-up. So when we look at that sector coming back, we're going to see the whole market come back as well, because tech, financial, all these things are huge in the market. They're going to pull everything down, or they're going to bring it back up. Only three things that you need are going to be that 50 SMA, 200 SMA, and you're going to need the RSI. That's all I look at for long term. So let's jump back into the charts. We can see SPY on here. Let's pull that up. And we can see that the 50 SMA in the blue line, it broke. Every time something breaks the 50 SMA, that's short-term healthy correction, because every time it touches it, it's most likely just going to hold it, try to test it a couple points here and there, and then most likely bounce back up, which is what the market did. So let's look at the charts. So that's what it did right here in the highlighted section. It touched that 540 area, and then it just kept bouncing back. And then once it broke the lows of those candles, it started selling off. So once it broke the lows of these candles in the highlighted section, it started selling off. And then we see a sell-off all the way down, but we don't see it come down to the 200 SMA. So what does this tell us, the 50 and the 200? 50 is just a short-term correction, healthy sell-off, just a pullback, people taking profits, and the markets bounce back up. It's all completely normal. When we see something go to 200 SMA, that's a big correction. That means that there's about a 10% correction, which is huge. 2 to 3% in the market is pretty much nothing at all. And then we saw the alerts hit at the key support levels at 515. So I started adding at 513, and then it started coming back up. I saw confirming because it was just that flash sell-off, like I said, and then I added at 520. So if you look at that, we're adding in this region at the 535 to 510, this whole region below the Fibonacci on that 23.6 to 38.2. So that's how I keep it simple in the market overall. If we look at this long term, the 10 years, it's not even down to the 23.6. So when people say, oh, we're in a recession or we're in a big crash in the market, not really, nothing. If you look at it in the long-term view, this is barely still a sell-off that we can look to buy for long term. And when we see these key price points hit, that's where we want to pull our entries. We don't want to just base it off, hey, our market's good, market's low, just throw darts in the air and say random buy and sell. We don't want to get emotional in the market. We want to be systematic, be like a robot almost, take your emotions out and trade and invest that way. So if you like this video, make sure to hit that subscribe and the like button, and completely free chat room, link in the description below to join. That's